Hey, what's up? It's Stephen A. Williams, president and founder of the creditrepairshop.com. Look at that. Got my barbecue ready. Letting employees have the half of the day off today on Friday. And they're cooking up, enjoying themselves. I invited everyone from all the different companies that I own. And I must admit, it does feel good to, number one, be able to help people with employment. To be able to have a work environment where people don't feel like they're under, like, have somebody that's just trying to breathe down their neck. That's something that my wife and I, when we set up our businesses and we started hiring people, we made sure that we wouldn't be that type of employers. I mean, we do hold people accountable, excuse me, but we don't try to intimidate people. Let me put it that way. And you might be in that situation at your job, or you might have heard other people. I know I went through it when I was in the military. But I mean, that's just, it just makes me feel real good that I'm able to do that. So let's get to talking about what I believe is going to be very important. I believe that this is going to turn a lot of your situations around. If you have any type of student loan debt, any type of credit card debt, any type of auto loan debt that, maybe you had a repo, payday loans, any of that type of stuff, I want you to watch out for this stuff. And this is some rent to own too. This is something that a lot of people, for some reason, don't pay attention to, and I admit that I didn't even really pay close attention to it until I started helping people who had, lawsuits against them from different creditors. And I guess it's one of those things where if you just do things over and over and over, and you start to think, like, what is wrong with what you're seeing? Like they present, like this individual presented the documents, read over, and we had actually won this one. So I want to talk about this victory real quick too, but it's gonna pertain to this one on what we're talking about. This client had a collection for repossession. They were trying to collect $28,000 from him. We did the helped him with the pro se defense. He submitted it to the court, and they dismissed it back in March. They dismissed the case. It wasn't dismissed with prejudice. Dismissed with prejudice would mean that they would not be able to bring it back up. So now they came back around, and the reason why they came back around, with these types of debts that are like repo debt, they're not paying pennies on the dollar for these debts. They're paying a lot of money, from, I would say, estimates of 5 to, I would say, 50%. They're paying about 50% on the dollar for these types of debts. And so they're going to really, if they, dismiss it the first time, they're going to try to come back around on people. And when they came back around, that's what kind of made a connection between what I had always did when I saw payday lenders suing people, and this debt collector who purchased a repo deficiency debt. Is that when you look at the truth in lending statement, and all companies have to provide this, even credit card companies have to provide it. Every company that makes a loan has to provide a truth in lending statement. And it will state the finance charges, the annual percentage rate, the amount financed, and the total payback that you would pay back. They say total payments, they mean the total that you're going to pay them back. One of the things that I've seen, especially with payday loans, is that when you look at the finance charge and you put it up against the, first, the interest rate. A lot of online payday loan companies are breaking the law with what they're even charging as an interest rate. But let's just say that they're not even breaking that rule. Because interest rate, you could charge, I think in my state of Wisconsin, like 400 or 500%. I've seen that, if not even more. But so even if they're not breaking the rule on the percentage rate, what we found, and this is even stated if you go and look up lawsuits from various banks, rent to own, credit card companies, I mean, big time lenders that you wouldn't even think would even attempt to do this, is that when you look at the finance charge and you look at the annual percentage rate, there's something that's not right with the loan, because it would equal out that the interest rate would be higher than what's stated. And they know that, everybody's not some type of math wizard. That's, basically people are under high emotions for being able to get approved and to get the loan, to get the car, to get whatever they're trying to get. So they don't even really pay full attention, and they don't sit there cracking the numbers. We just take the papers from the finance person who is paid and, all that stuff. They give it to us, we sign it. But what I'm finding is that you can see that some of these companies, and it's not just me saying it, there's lawsuits for all, I'm talking about from the big banks all the way to small. I don't see credit unions, but I see it with some savings and loan type places. I'm talking about there is a lot of companies that get in trouble for this on a yearly basis, for the truth in lending statement does not match the percentage rate that they're claiming. We saw this also with Santander. People were saying, I paid 5 years on my car and I still owe what the amount of the car was, what was on the sticker. And that's because the truth in lending statement was not true. Now, another thing that you got to watch out for with payday loans. Watch out for this with payday loans. This is how they do. This is where I can tell you right now, if you listen to what I'm about to tell you, you could potentially get your payday loan forgiven, and not even with a 1099 cancellation of debt. I'm talking about forgiven because they violated the rules of lending. Is that when payday lenders, number one, watch out for the cycle. Every state has a different law on how many times you can refinance or roll over a payday loan. But the trick is that when they roll over those loans, and then you look at the interest rate and they roll it over in 1 month, that could be a violation of the interest rate laws in your state. Yeah, you got to do a little bit of math, but that could be a violation. You got to watch out for that. So with anything that you're working with lenders, you need to be cautious and make sure that you pay attention to the interest rate, look at the finance charges, do your math, and if it doesn't match, you need to know that you can do something about that you may be able to get, especially if it's something like a debt that went bad, you may be able to get that debt not just forgiven to where they do a 1099-C. I'm talking about legally where they just cancel out that debt, period, because they violated your state laws. So be careful and watch out for that. Watch out for riders, like extra things that they throw on top that might say like this is a fee for this, a fee for that. Anything that they call a fee to make your loan possible could be considered something to bring up the finance charges. So if they say, well, we're charging you 22% over here, but then the finance charge has this fee, it has this fee, this fee, this fee, and this fee in there, you have to be very careful and you have to watch out for those. So now, all types of banks, before I close out the video, watch out with credit card companies. They've done this stuff. Watch out with them saying that your payment was not credited on time and then they charge you a finance charge. Look at that finance charge and look at what your state allows for credit card finance charges. It could be 1% over, and you can end up having where they either you maybe don't want them to cancel it out, but you can have them do some type of remedy in your favor. Watch out for balloon payments where they say, well, you have this payment here and then it's a balloon payment. Watch out for how they're looking at the balloon payment, the interest rate on that balloon payment. Most balloon payments are just for the principal, but be careful. They could say that there's a whole bunch of fees or something inside of that balloon payment. Private mortgage insurance. This was something that I went through. When you're home, every state has a different law on this, but most lenders are federal. and they have where I believe it's 75%, 80 or 75%. Once it crosses that threshold, you don't have to pay private mortgage insurance anymore. I even believe that why pay private mortgage insurance if you're not going to pay off my mortgage if something goes bad? Or are they getting it paid off and then they still try to sue you for the balance or put it on your credit? How could you even put it on their credit if you have private mortgage insurance? I got foreclosed. What is the private mortgage insurance for, actually? Is it just named that so you can get some extra money? So be careful, because if you have private mortgage insurance and they're tacking that on every month, with that amount and what your interest rate is, that could be illegally an illegal charge based on your state. Other things to watch out for. Watch out for e-banking. This is something that happens a lot with e-banking, internet banking. Watch out for universal defaults. If they're with credit card companies, otherwise there's good credit rating, has a negative. Yeah, if something, now check this out. Credit card companies are the only companies that can change your interest rate based on something that's going on with somebody else. So they could, say you have a 20% interest rate, because credit card companies are high. 20% interest rate. You mess up on another credit card, they could move your interest rate up to 30%. But you got to look at how they're doing that. Tell them that you want a updated truth in lending statement, or look at your truth in lending statement that's mailed to you with your bill, and you can see if they're breaking the rules on the interest rates that they're charging you. See, one of the reasons why these companies can get away with that is because when people start going through stuff, they're under too much stress and emotions to be looking at what's going on with my contract with the credit card company. I'm just trying to make the minimum payments so I can make it through this issue that I'm going through. I don't know nothing about this universal default agreement that they can raise my stuff up based on someone else's, me missing a payment with another credit card, or having my car repoed. So pay attention to those types of things. Let's see here. And I think that's it. I just wanted to get that to you. I think that this is a good video that you can refer back to, because if you have, number one, if you have the issues that I was just talking about, and then especially if you have a debt collector that's trying to sue you for a loan that maybe, other than making them do a full validation, you still do all of that, but you throw into your affirmative defense that you also want to challenge if they were even disclosing the proper interest rate to you. All right, if you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video, What Makes It Different, so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website, the3scores.com. Links are below this video. And remember, you can always grab my 3-pack of debt collector letters to stop debt collectors, statute of limitations, cease and desist, and the debt validation letter. All right, I'm about to enjoy my food here and then go back out with the staff. Have a happy holiday. Stay safe, and I'll see you next week.